Where's that promised $1,000 price target for Nvidia, hey? Did it get lost in the mail? Well, listen up, you brilliant minds. If you've been following Nvidia stock lately, you might be feeling a bit, well, underwhelmed perhaps. The share price has been hovering around the $100 to $120 range, and some of you might be wondering if our previous bullish predictions were a little over-enthusiastic, perhaps. Well, there is some good news. Morgan Stanley, the lovely investment bank, expects Nvidia's Blackwell production to reach 450,000 chips just in the fourth quarter, resulting in additional revenue of more than $10 billion for Nvidia. And the good news doesn't stop there. Jensen Huang, our lovely CEO, has finally decided to stop selling Nvidia stock after dumping more than $700 million worth. Why? Well, he's legally not allowed to sell anymore. And that's a pretty good way to stop a CEO from selling. Now, CEOs selling doesn't really tell you very much. CEOs buying tells you quite a lot, but they sell for all sorts of reasons. All of his net worth is tied up in one company. He might have a desperate need for another yacht or another plane or, some more chests to sign. He's got to impress the girls, if you've seen that. So the Nvidia story isn't over. Not by a long shot. And today we're going to dive deep into Nvidia's realistic growth prospects and current valuation. We'll explore everything from the Blackwell architecture coming up to the company's expanding market opportunities, and the numbers might just shock you. Oh, did I mention we got a secret weapon in our arsenal? My golden retriever Winston has been working overtime sniffing out the latest research, and he's quite the financial bloodhound. So while Nvidia stock hasn't reached $1,000 yet, our teaching portfolio is up 93% this year, which is almost as good. That's a $28,000 gain on a $30,000 portfolio. Fancy learning how we pull off such feats? Well, you've voted with your feet and you're making me do another 2-day live trading challenge at a different time this time, because a lot of our Europeans and our Brits were kicking off, and we don't want you to kick off. We want you to be happy and join the million people we wish to make financially free. So come and join me next week, Tuesday and Wednesday at 8 a.m. Eastern time, which I believe is 3 p.m. in tea time, London time, that is. And I'll be teaching you about an hour each day, how we set up those trades, how we automate profit taking and everything else. And it's completely free of charge. Just head over to felixprehn.org/challenge and be part of our gang. Now, let's get cracking on this Nvidia analysis. It's time, of course, to separate the hype from the reality and see what's really cooking in Jensen Huang's kitchen. It's probably a topless kitchen, isn't it? Now, let's address the elephant in the room. Nvidia's recent stock performance. Well, it's been a bit up and down, isn't it? After the last earnings report, we saw some concerns pop up. And despite beating expectations by a mile, the stock took a bit of a tumble. Why? Well, there were whispers about slowing data center revenue growth, worries about tightening export restrictions, and the delivery of their latest golden goose Blackwell. And of course, the ever-present debate about whether Nvidia's valuation had gotten a tad frothy. Now, if you've been watching the stock like a hawk or like Winston eyeing my dinner plate, you might have noticed something interesting. There seems to be a bit of a ceiling around the $120 mark. The stock has been bumping up against this level, but struggling to break through it convincingly. Now, I know what some of you are thinking. Hang on, Felix, didn't you talk about Nvidia hitting $1,000 not too long ago? And you'd be right to ask that. It was a bold prediction, though if you watched the entire video rather than judge it by its idiotic thumbnail, you might have gotten a little bit more information. But here is the thing. As the market conditions evolve, so must our analysis. Last time, we promised to make another video about Nvidia, taking a more conservative approach. And that's exactly what we're going to roll our sleeves up and dig into. Now, that conservative approach could still lead us to a pretty lofty valuation if my hunch is right, but we're going to let the numbers do the talking. Right, so let's take a quick jaunt down memory lane, shall we? Nvidia's journey from a plucky gaming GPU maker to the AI giant we know today is quite the tale. From dominating the gamer market to powering data centers and now leading the AI revolution, it's been quite the transformation. But I won't bore you with the details, you likely already know. Let's quickly set the stage on what makes Nvidia truly special. Well, Nvidia's true strength lies in its integrated approach to AI infrastructure. It's not just about making fancy chips. No, it's about the entire ecosystem. Imagine, if you will, a perfectly choreographed dance. The hardware, the software, and systems all moving in perfect harmony. That's what Nvidia has achieved. They don't just sell you a GPU and say, bye-bye. They provide a complete solution that works seamlessly from day one. And the heart of that ecosystem, it's CUDA, C-U-D-A. And it sounds weird, like, I don't know what it sounds like, a cocktail or something. But it is a very, very potent little thing. CUDA is Nvidia's parallel computing platform and programming model. It's basically the secret sauce that allows developers to harness the full power of Nvidia GPUs, which is why developers love Nvidia GPUs. And on top of that, we're speaking of consistency. Nvidia has maintained a consistent architecture across its platforms. Why does that matter? Well, imagine you're a developer. You've spent months, maybe years, perfecting your code for one Nvidia platform. Now, with other companies, switching to a new chip might mean starting from scratch. But with Nvidia, your code just works. It's like upgrading your car, but keeping the same steering wheel and pedals. That'd be kind of weird, wouldn't it? But, you get the idea. So this trifecta, this integrated infrastructure, the CUDA ecosystem, and the consistent architecture form an impenetrable moat around the Nvidia castle. All the developers already inside, and nobody can get inside from the, Intel camp or the AMD nasties. So it isn't just about having the fastest chip anymore, although they do, but it's about providing an entire ecosystem that nobody else can match and break into. Now, with this foundation in place, let's talk about Nvidia's next big thing, the Blackwell architecture. If you thought Hopper was impressive as a bunny rabbit, I'm thinking about adopting a bunny rabbit. He's called Howie. He looks very cute. Have you ever had a bunny rabbit? I've never had a rabbit. I don't know how what Winston would make of a rabbit, because I probably try to chase him, I'd imagine. Anyway, let's get back to Blackwell. It isn't just a step up from the bunny rabbit Hopper. It's more like a quantum leap. We're looking at a performance improvement that is, quite frankly, well, mind-bending. Let's talk numbers. For AI training, Blackwell is said to be 4 times faster than Hopper. Pretty impressive, but there is more. For inference, we're talking about a 30-fold increase in speed. 30-fold. Now, you might be thinking that's all very well, but can we get our hands on this thing anytime soon? Well, despite concerns from analysts, after Nvidia's recent earnings reports, the news is quite promising. Straight from the horse's mouth, or rather from Jensen Huang himself. Blackwell is in full production. We're looking at an initial shipment in Q4 this year, $10 billion worth of revenue according to the mighty of Wall Street, and ramping up throughout 2025. So what does it mean for Nvidia's market position? Well, imagine you're in a race and you're already in the lead. Now picture yourself suddenly getting a jetpack while everyone else is still on foot. That is essentially what Blackwell could do for Nvidia. With these performance improvements, Nvidia is poised to not just maintain its lead in AI hardware, but to potentially widen the gap. We're talking about enabling more complex AI models, faster training times, and more efficient inference. This could open up new applications in everything from autonomous driving to drug discovery, you name it. Now, don't get me wrong. Nvidia's competitors aren't exactly twiddling their thumbs, but with Blackwell, Nvidia is setting a new benchmark that others will be scrambling to match for years. Remember that integrated ecosystem we talked about? Well, Blackwell isn't just a new chip. It's a new foundation for that entire ecosystem. And that is what makes it truly powerful. But Blackwell is just one piece of the puzzle. Let's zoom out and look at the bigger picture, the market opportunities Nvidia is poised to capitalize on so we can come up with some sort of price target. Well, picture this. The world's $1 trillion worth of general purpose data centers are undergoing a massive transformation. They're evolving from traditional computing setups to accelerated computing powerhouses. And who's at the forefront of this? Yeah, Nvidia. And no, I didn't just make that up. Jensen Huang told us exactly this at the recent Goldman Sachs interview. The first thing that's going to happen is the world's $1 trillion of general purpose data centers are going to get modernized into accelerated computers. That's going to happen no matter what. As Jensen puts it, this isn't a matter of if, but when. It's like watching the transition from horse-drawn carriages to automobiles. Inevitable, but that's not all. We're also witnessing the meteoric rise of AI and generative AI. It's like someone opened Pandora's box of technological marvels. From creating art to writing code, from drug discovery to climate modeling, AI is penetrating every nook and cranny of our world. And guess what powers most of these AI applications? That's right, Nvidia hardware and software. Again, now Nvidia is pushing a concept that could dramatically expand its addressable market, its TAM. AI as a skill. Imagine AI not just as a tool, but as a skill that augments human capabilities across various professions. It's like giving every professor a super-powered assistant. Jensen Huang puts it this way: for the very first time, we're going to create skills that augment people. And so that's why people think that AI is going to expand beyond the $1 trillion of data centers in IT and into the world of skills. So this isn't about IT anymore. We're talking about AI penetrating every industry, every job role. It's like the transition from typewriters to computers, but on steroids. So what does it mean for Nvidia? Well, it potentially expands the addressable market far beyond the traditional IT and data center space. We're talking about a market opportunity that could dwarf even the massive $1 trillion data center transformation we discussed earlier. With its hardware-software ecosystem and now this vision of AI as a skill, Nvidia is positioning itself not just as a chip company, but as the foundation of this AI-powered future. And think about AI as a skill. What is that going to mean? Recurring revenue, subscription revenue, software revenue, probably at 90% gross margins. And that's what's going to impact the bottom line. So let's dive into some numbers and see what kind of growth we could be looking at here. First off, let's look at Nvidia's purchase commitments. Now, you might be wondering, why should we care about purchase commitments? Well, these commitments are kind of a crystal ball into Nvidia's future. Nvidia's purchase commitments through to 2025 have shot up by over 40% from just last quarter. That's the strongest acceleration we've seen since 2022. It's as if Nvidia is gearing up for a gold rush and, well, they're buying all the pickaxes and shovels I can get their hands on. What about revenue? Well, for 2024, we're not just looking at growth. We're looking at an absolute explosion. The consensus is that Nvidia's revenue is set to more than double. But what about beyond 2024? Isn't it all going to stop there? Well, let's put on our conservative hats. As much as we'd all love to see Nvidia continue doubling every year, that's about as likely as me winning the London Marathon. Instead, let's look at a more conservative but still impressive estimate. We're talking about 50% compound annual growth through to 2026. Now, 50% might sound a bit pedestrian after talking about doubling, but let me put this into perspective. The average annual return of the S&P 500 over the last decade has been around 10%. Nvidia's projected growth is 5 times that, so it is still an insane level of growth. So let's break this down. If Nvidia maintains this 50% compound annual growth rate, we're looking at their revenue potentially growing by 2.25 times by 2026. Now, is that sustainable? Well, when you look at the projected size of this AI market, to reach 1.85 trillion by 2030, Nvidia's growth seems kind of timid. Remember, Nvidia currently holds 80 to 90% of the market for AI chips. Even if that share decreases somewhat due to competition, the sheer growth of the market means Nvidia has plenty of room to expand. Sounds fantastic, doesn't it? But what does it mean for the bloody stock price? Get to the point, Felix. All right, let's get to the potatoes of our analysis. Now, as I'm recording this, Nvidia's stock is hovering around $116 with a price to earnings ratio, PE, of about 54. If you're scratching your head, PE ratio is simply how much investors are willing to pay for each dollar of a company's earnings, also known as profits. At 54, Nvidia's PE is significantly higher than the S&P 500 average, which is around 20. But before you scream, overvalued, remember, we're not comparing apples to apples here. It's more like a racing thoroughbred to a carousel horse. Nothing against carousel horses. So let's dust off our crystal ball and peer into the future. With all the advantages that we have discussed, and given Blackwell delivers on time without surprises, we're looking at a conservative estimate of a 50% compound annual growth rate for the next 2 years, which means we're looking at their profits more than doubling in just 2 years. So what PE ratio should be applied to these future earnings? Typically, high growth tech companies command higher PE ratios. But let's be conservative and assume the market applies a lower PE as Nvidia grows. Even if we use a more modest PE for the future earnings of, say, 40, which is lower than the current 54, we get some rather interesting numbers. If Nvidia's earnings double in 2 years as expected, and we apply a PE of 40, we're looking at a potential stock price of $170. That's still an upside of roughly 50% from the current price. And remember, we're being conservative here. Not bad, right? Now let's rein in our enthusiasm a bit. This is a simplified projection, and the real world is far more complex. Even more conservative estimates suggest there could be upside potential from the current price. Remember though, the stock market is about as predictable as, I don't know, London weather in the summer. So these predictions are based on assumptions. And as my old boss used to say, assumptions are the mother of all, a word that starts with F-ups. So it's crucial to do your own research and consider your risk tolerance and your stomach lining before you make any investments, and that you are not just all in on one stock and not just all in on AI, but you're a bit diversified. That's why I invest in things like Philip Morris and boring stuff like that. That's actually done tremendously well. So in my humble opinion, where I'm sitting right now, I can't see anyone who's about to eat Nvidia's lunch at the speed that Winston would eat yours if you were looking the other way. So before you dash off and ponder our insights, remember our teaching portfolio is up over 93% this year. If you missed last week's beginner trading challenge because you were not available at 8 p.m. New York time, I don't know what kept you busy, then you have another chance coming up this coming week where I will run it at 8 a.m. Eastern time, which will hopefully work for you, depending on where you are in the world. So head over to felixprehn.org/challenge, grab yourself a free seat, and potentially become part of the 1 million people that we intend to make financially free here with our little community. If you found this video helpful, why not give it a thumbs up and maybe even share it with a friend or a golden retriever? And I wish you a beautiful, tremendous day. All the best. This piece of news has caused a dying chip company to rise 6% despite crashing over 50% year to date. What does it mean for the semiconductor sector? Well, buckle up because we're going to dive into a potential $90 billion deal that could reshape the entire chips industry.